dun, the late adopter. So how do you actually catch a falling knife? I was browsing YouTube and I saw this video called How to Catch a Falling Stock, September 13th, that's today. And I was actually interested to watching the video because, you know, I wanted to learn something new. You know, I wanted to learn how to catch a falling knife. Now, unfortunately, he talks about a lot of stuff, you know, but not actually about how catching the falling knife. You know, there are a lot of memes and stuff like that, and you know, but there is no help. Like he gives nothing of value that can help you catch a falling knife. So I thought, like, hey man, let's make a video and tell people how to catch a falling knife. So I'm going to explain to you, you know, how falling knives happen, you know, what we are looking for and how do we catch the falling knives. And these are actual falling knives, like when, you know, when the stock or the, you know, crypto is falling down like lightning speed, and you want to catch that, you know, that bottom. Like, when do you catch? Like, at what is the metric that says, okay, now it's like time to buy, time to get in? Because somebody is catching the knives, right? Somebody knows when to buy. Somebody is buying that knife on the dollar at the very bottom. How do they do it? And I'm gonna explain to you how they do it. So this is the chart of Bitcoin recently, actually, and this down here could be considered a falling knife. Now, falling knives, when they fall down, they get usually these big wicks and they bounce towards the upside. Oftentimes, you know, they don't necessarily go towards the upside, you know, but you know, however you look at it, you want to catch down here this falling knife, right? You don't want to wait for the pump back up here, then get back here, then go down, then, you know, sell and stuff like that. You want to catch the falling knife, and I'm gonna explain to you how these things happen. So the white line up here, the white line, that's the 10 moving average. When we are talking about falling knives, we are talking about extensions to the downside away from the moving averages. So when price extends on the downside away from the moving average, you see up here is the 10 moving average. When the price is extended from the moving average above certain normal distances, we say that the price is oversold, because usually the price goes around these moving averages. Even when it goes down, it doesn't go down too much. It doesn't do something crazy like this up here away from the moving averages. It always goes back to the moving averages. And when the price is way extended away from the moving averages on the downside, that's when we actually try to catch the knife. So how do we do this? There's an indicator called TLA OVX indicator, this down here, TLA OVX indicator, late adopter, overextended indicator. It's my indicator. It's very nice. You can measure the extensions of the price away from certain moving averages. If you look here, you can look for extensions from the 10 moving average, 20 moving average, 50 moving average, 100 moving average, and 200 moving average. You can also measure the wicks. So I'm going to explain to you how this is being used to actually catch the falling knives. So right now we are going to look for extensions away from the 10 moving average. 10 moving average is a speedy moving average, and we will be looking for extensions above the 10 moving average. And we'll see that this dump down here, you can see how this is the zero line on this indicator. Zero line is very important. When the price is right over here, when the price is crossing or sitting on the zero line, that means that the price is right on the moving average. So when the price goes below the moving average, this indicator, this line goes below the moving average, and where price is above moving average, like over here, for example, the indicators is showing we are above the zero line. So basically, it just measures the distance in percentages above and below the moving averages, right? And it's very easy to use. It's very intuitive. So what we are looking for is some kind of extension. Now, if you zoom out a little bit, what you're gonna see here, and it becomes very clearly, this is 1 hourly chart. You can do this on any kind of time frame, 4 hourly, daily, whatever spanks your monkey. But you'll see that this dump down here and this wick down here went way below certain normal levels. So if you look at this indicator down here, you'll notice that most of the trading, most of the extensions to the downside or upside are between two certain levels, and everything above that and below that are what we call overextensions. So we call that overextensions because price pushes in the one direction too much because maybe some kind of news, maybe some kind of a you know, fear, whatever it is, right? It pushes that, but it goes way too far away from the moving averages, and that's called overextensions, and that's the time when we are trying to catch the falling knife. Sometimes the price might start lingering on the downside and pushing this indicator on the downside, and suddenly you will see a big drop. Now when that big drop happens, you will see that this starts to happen. The price starts to overextend away from the moving average to the downside, because people do not understand this kind of technical analysis, and they don't know where actually is the bottom, and they do not understand that price always moves back to the moving averages, and you know, within certain normal range, price pushes to the downside or to the upside. So when this move down happens, you will see it on the overextend indicator that the price actually overextends. And when it starts overextending, it's really hard to say when it will actually stop. Will it stop here? Will it stop here? Will it stop here? So we are also looking at very small time frames. Depends. If you're looking at daily, you're probably looking at 1 hourly to find some kind of bottom, right? Maybe even 5-minute chart when you're looking on a 1 hourly chart and trying to find a 1 hourly overextend levels, because you want to see exact moment when it starts dropping and starts, you know, picking up. Because as soon as it starts picking up, when it gets down here, as soon as it starts picking up, it's not very probable that it will continue dumping to the downside. It's not very probable. So what happens on these very extended or overextended levels is price, as soon as it starts gets to these levels down there, you'll see something on the 5-minute chart or minute charts that the price suddenly starts going towards the upside, and that's usually sign that we are right now at the very end of the falling knife. And this is how you catch the falling knife. So let's clear up this a little bit and see some kind of examples over here. So first example we'll see up here, and you will see that the price started falling down away from the 10 moving average to the downside, and that was up here before this candle up here was up here all the way at top. But as soon as this went down here, it went, where was it all the way down to the bottom down here. And the second one did not go that far down. Let me just do this a little bit. You can see second one did not go that much down because it picked up. What this is measuring right now, and I'm going to show you an indicator, it's measuring the close. It's not actually measuring the wicks. So it's measuring this point up here, and not this point down here. And that's why on this indicator, if you go here, you can see here, you can check this box up here, and it says measure wick instead of close. If you do that and click on that, now he's actually measuring the bottom wicks. You see down here the wicks. Now we are measuring the wicks. We are no longer measuring the closes, we are measuring the wicks. Okay, so right now down here is close and the wick are in the same place, and that's right over here. But you can see here that it extends down towards downside, and you'll see this on the chart. You'll see it live on the indicator that we are being extended all the way down towards downside. We don't know, you know, whether it's gonna stop here or it's gonna stop here or it's gonna stop all the way here, or maybe even go even further towards the downside. But we know that these levels are overextended levels. So whether you buy here or here or here, it really doesn't matter, because they're already extended levels, and we from the 10 moving average. That's really important to understand. We are extended on the downside away from the 10 moving average. And using the wick, you can look this on live how much you are extended from the moving average. Let's see some other examples of this move that's happening. This is 1 hourly time frame, and you can see here that anything that goes maybe below these levels, you can see normally this is normal movement towards the downside, upside, but this is overextend levels. These are when you get catching like. You can see here 2 wicks down on the downside. I'm gonna explain to you what happened here. 2 wicks on the downside. This is the first overextend level down here. Let me zoom in a little bit more so you can see it nicely. This is the first overextend level down here with the wick, because right now we are measuring the wicks. This is the first extend levels, and even though it went back to the moving averages, it did not go towards the upside. And that's of course always a possibility that, you know, the price won't actually go to some crazy levels to the upside, but usually it, you know, comes closer to the zero line. Usually it goes back to zero line. So although this indicator went back to the zero line, it went actually sideways on the chart. So indicator goes back to the zero line, but it went sideways on the chart. And the second time was down here, and you can see this overextend level when it started hitting down here. Also another overextend level, and then it pumped back to the zero line. So and we already knew that these levels down here are overextend levels, but they are not extreme overextend, still overextend levels. But this is 1 hourly time frame. On daily time frame, this might even be even bigger. You can see these overextend levels where we are catching the knife, right? And these are levels that we are trying to catch the knife. When you see something like this down here, it doesn't have to be that it's gonna pull back to the moving average all the way straight up. It might just go down here and go sideways until the the moving averages catch the price, and this will still climb slowly towards the upside, but they are overextended levels. They are overextended levels, and some kind of maybe sideways motion gonna come, or maybe a big pump towards the upside. Towards the upside. Let's look at some more, but let's go to the 4 hourly time frame and find more overextended levels just to see how this looks. So first thing you want to see is where some kind of normal trading range is happening, and that's around here. That's normal. So all of these wicks to the downside, they're extended levels on the downside. Here's a big one. You remember this one when the bull market kind of said like, nope, I'm not doing that anymore. And there was also this one, a big over here. You can see it also on the 4 hourly time frame. So you can even see it on the 4 hourly time frame. This last one, you can see it on the 4 hourly time frame that you are extended on the downside. But let's look at the one that that's very interesting. This one down here, you can see this big wick on the downside. All right, so it would be nice to buy at 29,000 and then go all the way up to 40,000 within what's that, within like a day or two, of course. And how do we do that? Well, we look for extend. Now this is also extension to the downside, big extension to the downside, and so forth. So these extreme extensions to the downside, that's when we like to catch the wicks. So you can see even here on the 4 hourly time frame that these wicks down here, this one down here, and this one, they are very extended levels. But this is extreme levels. So when you see something like this, and if you remember the dump, it was a 50% dump on most of coins over here. These are some extreme overextend levels, and that's when you catch the knife. This can also work of course on the daily time frame, and so forth, and how much stuff goes to the downside. You can see here on the daily time frame over here, Bitcoin price chart away from the moving averages. So normal levels, I would say, is something around down here. Normal levels, and everything else is overextended levels, right? Everything else is overextended levels. You can see down here this big wick down here, this big corona dump. This is a corona dump down here. That's the big corona dump. This over here is when the market said like, nope, not doing that anymore. So these big moves to the downside will be presented on the TLA overextend indicator always, and that's when you can have a chance to catch the falling knife. Now there are other ways to figure out when to catch the falling knife, or how to catch the falling knife, but this is one of the more helpful ways to figure out like when the price is oversold so much that it has to bounce back, or at least go sideways. So even if you buy, it won't literally just continue dropping down another like 10,000 or whatever, right? I mean, it can happen, anything can happen, and so forth. And now for the last part, I'm gonna show you when we get down there, when we get to the very bottom down here, how do you know that it's actually a bottom? Well, first thing first, once you cross certain, historical low levels down here, we are already looking for some kind of bottom, right? So for that, we start going. Let's focus on Corona dump right now. For that, we start zooming in on the small time frame. So this is the daily time frame. This is the daily time frame. So we start zooming in, right? Let me just find it again because it changed a little bit over here. We start zooming in, and you can see here. I mean, on the daily, you will be seeing this wick going really heavily down. So this first red candle up here, the first red candle, this wick down here, It's actually down here, but it's not measuring the wicks again. It is measuring the wicks. Oh, it's a green candle, so it measures to the upside. Okay. There's a slight thing you have to know about the indicator. It always measures the candle based on the top of candle. So if it's a green candle, it measures these wicks on the upside. If it's a red candle, it measures these wicks on the downside. But of course, when it's dropping down here, it is red, so it will be showing the wick on the downside down here. It will be showing the wick on the downside. So that said, when it was a red candle down here, before it became the green candle, it was measuring the wick on the downside. It was measuring the wick on the downside. So we go into the small time frames. Let's go back to the Corona dump down here. We go into smaller time frames, even as far, maybe even as something like a 1 hourly time frame, because Corona dump took a while. I don't know how much history can we get up here. Wait, where was it? It was down here. There is it. You go into smaller and smaller time frames until you see some kind of change. This is 1 hourly time frame, you know, and in 1 hourly it pumped already a lot. So you might even go to some kind of, I don't think we can see this on the 5-minute chart, because 5-minute chart it just doesn't go that far back, unfortunately. The smaller time frames, you know, here, you know, it doesn't go longer than that. But maybe we can look at a 5-minute chart here on this dump, last dump that happened here recently. And you can see on the 5-minute chart it already pumped hard, but you know, for these small dumps, small overextended levels, for these small overextended levels, you know, 5-minute chart or even 1-minute chart might be very, very helpful to find some kind of a you know, reversal point when it comes. So here we are right now on 1-minute chart, and you'll see on the 1-minute chart, as soon as this happens up here, as soon as this happens, as soon as, you know, see a 1-minute chart, because on 1-minute chart it starts dropping really hard. And then you will see, of course, on the 1 hourly or the 4 hourly or something like that, you will see a big overextended levels here. Here you don't see, because this 1-minute chart, you don't see that overextended levels, but on 1 hourly you will see those extended levels. And when you see those, you go down into the small time frames and look for a reversal. You look for some kind of a reversal, you know, interest of buying, and if you are on some extreme overextended levels at the same time that buying starts kicking in, that might be the time to get in. That might be time to buy and catch the falling knife. So unlike this guy over here that didn't say anything useful, right now I'm giving you some useful information on how to catch the falling knife. And if you want this TLA overextend indicator, it's on Patreon. It's on Patreon. You just have to join exclusive TLI content and TA crash course. So under the TA crash course, you can get indicator for free. But that's how we find these overextend levels, and that's how we also know that you know, how to catch the falling knife. But not only that, the TLA overextend indicator is not actually for falling knives. It can be used for falling knives, but it's mostly just to see some overbought or oversold levels that can help us, you know, figure out, you know, the next move, or maybe some kind of support levels and so forth that might hold. So I will right now, as an ending, show you another use case for this indicator. This is a weekly time frame of Bitcoin. And on our channel, we knew that, you know, soon the reversal will come and we'll pump from over here. We're looking at some kind of 28 levels. Unfortunately, it was only in 29.5 where it actually started pumping. But we are looking for some kind of overextend levels from the 20 moving average. Let's add up here. Let's add up here the 20 moving average. Not week. We're gonna look for the closest. 20 moving average. Usually we are looking for some kind of pump back to the 20 moving average, but on the 10 moving average, that's where we saw the extreme oversold levels. So over here, if you look at a Bitcoin chart historically, you will notice on this indicator down here that these overextended levels to the downside, happened 4 times since 2017. 1, 2, 3, 4 times. So we knew We mostly knew. I was telling people almost every day, almost every week, we are very, very extended to the downside, and soon, because you don't know exactly when it's gonna come, today, tomorrow, you know, you don't, but you know that you are extended so much to the downside. So there are two options that happens here when you are extended to the downside. You are either go sideways, so this indicator can go back to the 0 line, so this 10 moving average can come back to you, right? Or this it was down here, and we did that as well. You know, we went here and went some kind of sideways level here, picked up back to the 10 moving average, but we also knew it has to go back to the 20 moving average, and that's where the 20 moving average comes in here. 20 moving average, clean up everything, and you also see that these levels do not happen that often. These extreme oversold levels do not happen. Not only that, on the 20 moving average, we didn't go back to the 0 line, but we knew that, you know, eventually we'll go back to 0 line. We are calling for 45, 40, 44, 45 levels up here. We are calling for some kind of pump towards the upside. And you can see here, once we start, you know, dumping down, like eventually, you know, it has to come. So we're looking for some kind of support, and we said like 28 kind of support might take hold, but based on this indicator down here, of course. So now, you know, I hope you learned something. I hope you get something out of this, you know, and this indicator, you don't have to get it, you know, you can just, you know, create your own or look for some kind of extension to upside and downside, you know. But I just got kind of, you know, a little bit upset that this guy did not actually tell me anything about how to catch a falling knife. So I thought, hey man, let's make a, you know, video on how to catch a falling knife. I hope this was educational. Hit like button on the way out. Bye bye.